Wayfair has just announced that they are laying off more than 300 employees and replacing them with AI. Wayfair is the popular online furniture and home goods retailer, and they also plan to close its technology development center in Austin, Texas. Wayfair is already a small company, so laying off hundreds of employees is a big portion of its workforce. This also marks the company's third major round of layoffs in just over a year. As part of these cuts, Wayfair is also shutting down the Austin Technology and Development Center. This move has left many employees scrambling to find new jobs with raising concerns about the company's future decision. With three layoffs in the past year, a lot of people are scared that their jobs are on the line. This is a very hard hit for employees, and the latest layoffs affect a wide range of workers, which include corporate employees, as well as those in Wayfair's technology division. Many of these workers played key roles in the company's growth, and now they find a difficult decision of searching for new opportunities. And this is because Wayfair has been having a very bad stock depreciation amid declining sales. If we take a look at Wayfair stock, it is down 32 in the past year. During the COVID pandemic, Wayfair did do really good, going from a stock price of around $40 to all the way to highs of $340. But ever since, the stock has declined and is now down 90% to $31 per share. And this is a very tough decision for a lot of employees because not only is Wayfair having layoffs, but many tech giants as well. So now they have to compete in a very competitive tech market. Wayfair says these layoffs are part of an effort to cut costs and becoming more efficient. And we can see that with its development of its own AI. Wayfair says these layoffs are part of an effort to cut more costs because of their stock depreciation. The company grew rapidly during COVID-19, as we saw with its stock price, and that was really when people were spending a lot of money on their home improvement. However, as consumer spending slowed and demand for furniture dropped, Wayfair found itself struggling to stay profitable. Despite generating billions in revenue, the company has consistently reported financial losses. In response, Wayfair's leadership is focusing on reducing expenses, which unfortunately means cutting jobs. This isn't the first time the company has done this. Wayfair has laid off 1,750 employees in early 2023 for similar reasons. While cutting costs is generally a good thing for the stock price, investors are very worried that these layoffs are too harsh. And while in the short term it can help the company be more profitable in terms of numbers, the long-term aspect of Wayfair with less employees is very concerning. Wayfair's layoffs are part of a larger trend in the tech and e-commerce industries. Many companies that thrived during the pandemic are now downsizing as consumer behavior shifts. Companies like Amazon, Google, and Meta have also laid off thousands of workers in recent years. For Wayfair, the road ahead remains uncertain. The company must balance between cutting costs with keeping employees, as well as delivering quality services to its customers. If Wayfair can streamline its operations without sacrificing customer satisfaction, it may have a chance to bounce back. However, if it continues to struggle with profitability, more layoffs and cutbacks could be on the horizon. This is pretty crazy. It's very unfortunate that all these tech workers are actually getting laid off. They are going to have to compete with each other, especially those tech giants, Amazon, Google, and Facebook. Those are some very talented people. So now these Wayfair employees do have to compete with these high talent candidates. A lot of tech workers are actually considering changing industries because of how bad the tech industry actually is, especially with the rise of artificial intelligence, which a lot of companies are developing to save money. However, it's always best to remain optimistic and that things will always bounce back.